All right, well, welcome this morning, everyone. Welcome to our Maintenance of Effort Medicaid and Year-End Closeout Special Education Edition. We want to make sure that we take some time to review some of the year-end practices and try and take the confusion, frustration, and just the maybe general non-understanding of how to close out some of these complicated things at year-end. So with that, we're going to get started. I'll talk about our agenda today. We've got a full agenda. We're going to talk about LEA maintenance of effort overview briefly. We'll talk about the standards for determination, which means meeting MOE, the tests that we do, some of the exceptions you may be able to take. We'll talk about maintenance of effort in the application for funding. We'll talk about accounting for Medicaid inside of MOE. And again, that MOE maintenance of effort year-end projection and balancing, Medicaid year-end balancing, and finally, some Medicaid reconciliation practices to get us through year end. So let's start with a basic overview. Always a good place to start, just so we remember what the purpose of maintenance of effort is, the code that it's defined under. So 34 CFR 300-203 talks about LEAs, or local education agencies' maintenance of effort. And what that means to us is that it says that our IDEA Part B funds cannot be used to reduce our state and local effort of expenditures that we spend on special education. So that's, again, the amount of our local total expended for the education of children with disabilities. It's the amount of funds that establishes this threshold, if you will, of what we spend and maintain year to year. Now, I get asked, but I don't understand what that means. And so I've tried to break this down as simple as I can for you guys. This is a good one to post on your wall. Maintenance of effort is just your general fund or your state and local special ed expenses. That's all it is. So that level of effort refers to the amount that you guys spend out of your own funds that you guys contribute and spend on your special education programs. And you guys know that you spend more of your own funds by far than what is given to you in IDEA funding, or that you might recoup some from Medicaid. Now, Idaho identifies 3 IFARMS function program codes. They're specifically designated for our special ed maintenance of effort. And I've got those listed here. I want to break these down as well, because I don't think sometimes all of you, especially as we have turnover and it may not just be explained and it's just a couple generic terms in the chart of accounts. So I want to make sure that you guys understand what these function programs mean. The 10521 is really our instructional school-aged expenses. So think of it as your teaching staff for the most part. And the 522 is our preschool, or ages 3 to 5, which could include 5-year-olds in kindergarten if you don't have a preschool. And that's how we think about that. Those are instructional. 616 is different. That's non-instructional support services. So that could be your special ed secretary, folks that are not part of the instructional component. So think about that when you're starting to code things, so that we make sure we don't lose sight of how to keep track of that from our budgeting perspective, who's on the salary schedules where and what in what capacity. Now back to the IDEA regulations and goals. So we get this IDEA federal grant fund, and the purpose behind it is that the government wanted to ensure that state and local governments were already supporting special education programs, and that they have to maintain or increase their level of spending from year to year. Well, why do we have to increase it? Well, if you think about it, everybody's costs go up. We have inflation, just the cost to run and do business. We have sometimes legislature will mandate a career schedule change or a movement on that career ladder. So we know our expenses are going up. And the federal government knows this as well. And so they have this provision in place that says, we know you need to that you're going to have at least a similar level of cost, and we don't want to see that you're lowering that by taking federal funds. Now, some of the standards, we're going to talk about standards next about maintenance of effort and how we determine that. Well, again, we have federal code here, and it establishes this eligibility standard based on those prior year expenditures that you guys have from year to year that you spend out of your own local funds. or state and local. Now, the federal code tells us there's 4 ways that you can then determine if you've passed or failed that level of effort. Have you maintained your effort? We're going to talk about those next. There are 4 basic criteria. You can have a combination of state and local funds. That's your total amount. In the application, it shows up as the adjusted total. Then you can have a combination of state and local funds per capita, which means divided by child count, and you get that per student rate. So you can meet your level of effort on either one of those. You can also, if you have the ability to track local funds only, like if you have a permanent levy, I have 1 LEA out of the entire batch of you guys that has this. But the same thing goes there, total amount, or you can do a per capita basis divided by your child count. But from year to year, you just have to make sure you spend at least the same amount as the prior fiscal years. Now let's talk about the maintenance of effort test next. So every year, Special Education Department here at the SDE, we do this test. We compare your prior year expenditures with the last fiscal year and make sure that you have met that test. But there's 2 components that you guys need to recognize. We have what's known as the compliance test and an eligibility test. And that's, again, under law, that's why we do it. But the maintenance of effort compliance test is going to test your actual expenditures from the most recent fiscal year to the prior year. But the eligibility test is the budget. So you have to compare that whatever the highest amount last spent, you have to budget to at least meet or exceed that. And we just went through this when we did our IDEA Part B preliminary application. You guys had to submit a budget that showed that you were going to spend at least the same amount or more for maintenance of effort. Now, I get a lot of questions too about exceptions. So we're going to go into that a little bit. Maintenance of effort exceptions allow us to have this reset button. There are specific ways that we can recognize that our costs have gone down and that it's an exception that's approved by the federal government to tell us that we have a qualifying event, the certain circumstances that we met, that we are going to then be able to reduce our lower that level of effort. So let's talk about what that means. There's only a couple that are approved, and this first one is usually the one that I see most of you guys use. So we know that staffing is our most expensive cost. And so if we have voluntary departure by retirement or just cause, related service personnel that we can't backfill, that kind of thing, that's an exception because you've not maintained the same level of staffing. Now, you could also have a decrease in the enrollment of students, right? If you have a lower child count, the feds recognize that, hey, your level of effort may go down as well. So something else to think about. So keep monitoring that. Now, you could also have had the termination of costly expenditures for some long-term purchase, something that then went away. What if you had some really expensive piece that then just disappeared and you don't have to maintain or continue to have that service under your belt? And then the termination of costly exceptions and obligations that are tied to a particular student. And maybe it's because the student left your actual LEA jurisdiction, or they reached the age, they aged out where you don't have to provide FATE anymore, or maybe they don't want the program anymore. They no longer need it. We have, maybe I've seen this before, maybe you have too. Maybe that parent just doesn't want their student to have those services anymore in high school or whatever the situation may be. So those were our exceptions. Now we're going to talk about where we can find them. So this is a screenshot inside with a final application from a prior year. And inside the area of the application for maintenance of effort, you will see a category for an expenditure exception worksheet. So this is where you're going to show me, and you'll notice these are the exact descriptions we just talked about. They're the only reasons you can reduce your maintenance of effort. So you're going to fill this in and you're going to attach documentation to match the amount. So you can't just say, I'm estimating that I've about $3,657 less because this student left. You actually have to attach something to show that little Susie had this service and here's how I capture the cost of that. Okay, so you're going to attach that exception. Let's do another example walkthrough. Let's talk about the voluntary departure example, because this is, again, where most of you guys have this. So let's say fiscal year 21-22, you had 500,000 for your level of effort, right? For that expenditure threshold. But then in fiscal year 22-23, you lost a teacher, they retired, you couldn't backfill that position, and you equated that salary difference or that loss that you didn't have, that you did have in the prior year, and you captured it at $60,000 a year. Let's say John retired, he was at the top of his salary schedule, and you couldn't find anybody come in and replace him. So it's $60,000. So for this fiscal year 22-23, you have that eligible expenditure exception that you can plug in. So it reduces your threshold, as this bottom bullet shows, down to 440,000. So that would be your new level of effort. I want to show this again on the screen with the exception worksheet. This is that, top line. I have it highlighted here, the 15,837 in this example where the red arrow shows you. This is where you're equating the cost. Maybe it was the cost difference in somebody that you hired. You replaced John with a brand new, fresh out of college person, and they cost $15,000 less. But again, in the purple square right smack in the middle here, this is where you're going to show me a copy of John's costs versus your new hire. So you have to show me that difference. And you would also attach anything for any other further exceptions, like in this example, where there's another one captured for the loss of a student because they left the jurisdiction. So the other component here, I have this little stop hand. You don't have to wait for year end. If you know at the beginning of the year that John left and you didn't backfill, you can watch that throughout the year and capture what that amount was. And if you don't end up hiring or backfilling that position, you'll know what that expense is going to be that you will have as an exception. And you can track that throughout the year so that you can meet MOE knowing that you'll have this exception and still spend IDEA appropriately throughout the year. So maintenance of effort is not just at year end. It really is all year. And it takes everybody looking for those reasons, those qualifying events. The business office could see that you didn't replace the staff, but they're not going to know that Susie left and she had, a one-on-one aide, or that, she had X amount of services that are not there anymore. That's going to be a special ed director communicating with the business office that, hey, this thing that happened last year is not happening this year because she's not here anymore. Okay, let's talk another exception. How about this one? In fiscal year 21-22, you had again that $500,000 for your total threshold. And let's say your child count was 100. So when we divide that basic math, we get down to the per student level of 5,000. But now in fiscal year 22-23 that we're about to end, your child count had gone down by 10. So you're down to 90. Well, the exception says, hey, it was a $5,000 per student. You lost 10. You now get a $50,000 deductible, so to speak, that you get to take that deduction out and reset at your new threshold at $450,000. So think about that. This one gets actually auto-populated for you, and we ask you if you want to take it inside the application. Now, another way to reduce a level of effort, this is the one that sometimes gets confusing to folks. It's called the adjustment to local fiscal efforts. So all this means, it's another specialty item that the feds came up with. It says, hey, if we gave you more IDEA money, then we will let you reduce your level of effort from your state and local funds by up to 50% of that increase that we now gave you. So we gave you $20,000 more than last year. You can take $10,000 off of your maintenance of effort. So they're still wanting you to grow your level of effort because we know costs go up in general, but this is the other way to do it. So here is a screenshot that's showing you in your allocation in fiscal year 22-23, it was $34,811. And then we're showing you that the new allocation for the upcoming fiscal year was going to be $42,478. Then we're going to show you that 50% of that is this $3,834, and you get to reduce that by that amount. Now, at the bottom of the screen, the screenshots are there. I can't bump it forward yet. So this is last year's screenshot, but just take it for what it is. The arrows show that you have to actually fill in that you want to take it. We're calculating it over to the left, saying here's that 3,834 you can take, but if you don't type anything in, you haven't taken that adjustment. You don't have to, and it will show up in both the budget section and the expenditure section. But in order to be able to take this special item, this special line item, there's a couple extra requirements. You have to meet the requirements under the results-driven accountability, RDA determinations. Now, if you're a business office folks, you probably don't know what that means. If you're special ed director, you should know what that means. And either way, you will be notified as a district superintendent, usually business manager now, and the special ed director. It will show that you have some areas that need assistance or interventions or substantial supports. You would not then be able to lower the level of effort because the federal government says, it looks like you have a few things that we still need to work out. We don't want you to spend less. We want you to have full funding available. Now, the amount taken on that adjustment has to also, if you do qualify and take it, it still has to be spent on something that's allowable under the Elementary and Secondary Education Act. And you have to be able to track that somehow or prove out to us that, yes, we absorbed that back into general fund spending over here instead of in maintenance of effort. And we'll show you how to do that in the application, should you choose to take that. So we just got the list. I think they just finished the analysis. So any districts that did not meet requirements under that RDA determinations, they will be notified soon. Now let's talk about where MOE appears more in this application. We just finished the preliminary application. It was due last week. We have a couple that we're sending back for some final adjustments, but I've got to get them all approved by June 30th because the feds say if you want to start being able to spend or backdate spending to July 1st, even if you don't get your grant until November, if you want to be able to backdate, you have to have your preliminary budget approved by us by June 30th. So that's where that big push comes from. The final application, you're going to put in your actual expenditures. So we can't do it all in one full swoop, right? We have to say, here's my budget preliminary application. I meet the eligibility test because I'm showing you that I'm forecasting I'll meet this budget requirement. Okay. The final application comes out. You're now going to report all your actuals. That's the compliance test for maintenance of effort. And you might have to, as this last bottom bullet shows, you might have to update your budget in section 3. If your expenditures from section 2 that you just closed out your year are higher than what you had originally thought they would be in the preliminary application. And I'll show you what that means. In the preliminary application that we just finished, all you saw was the threshold, the section 1 annual report, which was from 2 years ago, actual expenses. You were budgeting what you thought you were going to do for the new year, and you had an exception worksheet that you could put in if you were forecasting that you would have a drop for the upcoming year to maintenance of effort. But in green here, I have noticed no expenditure section. That's how you knew you were in the preliminary application, okay? So this is where you put in your budget, best guess until you've closed out your year. And this is a screenshot from last year. We're just looking at sections here. Now on the final application, you'll notice all these other section 2 and whatnot, and the expenditure exception worksheet will appear. This is where you're going to tell us, what did we spend in the year we're closing out? So you're going to always see at the top line here, it'll tell you the expenditures for the fiscal year it's asking for. This is a screenshot from a prior application, just make sure everyone understands. But this is where you're going to tell me, what did you spend in the current year? And if that does raise your threshold, you're going to pop back over to section 3's budget and update it accordingly, because otherwise you'll get an error and it won't let you finish the application. Now, speaking of thresholds, I was talking about your threshold table. So this is a screenshot of what that looks like. We actually put together and built this table in fiscal year 2019-2020, and we pulled in all your prior reporting so that you have this nice history, and it's in conjunction with the federal standards. And we always call out what the highest amount was. We always tell you what that adjusted total threshold was, okay? We tell you, here's your per pupil that you have to meet, or you don't have to meet, you get to meet on one or the other. But if you want to go for the per pupil, you're showing that many, many moons ago, you had a low child count and high expenditure. So you had this high per pupil threshold. And then over time, you can see it creeped up accordingly as the child counts went up. You probably had to hire more staff, so you had a big jump. So all of this shows a total adjusted here that is a good place to kind of just watch according to child count, how and when our numbers went up. But this is what you're going to refer to when you want to see over time and see what it is that you needed to meet. Okay. Next slide. So let's talk about some of the common issues or misconceptions about MOE, maintenance of effort. A lot of people believe that it has to be the same as last year. Well, it has to be at least the same amount as last year, if not more. Now, you also have a lot of folks that think that you don't have to report everything for special ed in here. And that's not true. You have to make sure that you bring it all into the actual maintenance of effort function codes. Now, if you have some other little professional development account, there's an other section you can pull in as long as you're still capturing it. But what we don't want you to do is say, oh, I met exactly what I did last year, so I'll just move all those other special ed expenses somewhere else and not capture them. So you still have to do it. You still have to say, this was a cost to me in my district or my charter. Now, and the last misconception is that people think that the Medicaid match doesn't have anything to do with IDEA, but it does. And we're going to go into that in a few minutes. We have to remember that maintenance of effort for special education means special education expenditures excluding or not including the federal funds. That's all this means. And let me give you a quick on that number 3, just we're going to talk about this over and over again coming up, but think about Medicaid. If you're not billing for Medicaid, you have expenses incurred for special education services. If you do bill for Medicaid, some of that is going to get reimbursed from this other funding source, right? But not all of it. We know that not all of it gets reimbursed. So it still remains an expense to you. So that matching component was still an expense to you. And just think through that as we continue through these next few slides. Let's talk about the accounting. Okay. Remember that Medicaid is federal funding. 2 pieces of legislation tell us this. Here's the code, talks about the reimbursements from Medicaid is not part of your local effort. So the total reimbursement is not, but it said Medicaid expenditures for providing care for these eligible individuals are not considered federal awards unless your state requirements say they are. Idaho Medicaid's plan actually says we're cost reimbursement, which means we have to treat them as a federal award expended. Okay, so that's where that comes from under the uniform grant guidance. All right, now accounting for the match. Again, we have people that fight this sometimes. I want to make sure that you know where this comes from. So this link that's inside here talks about the Medicaid match OSEP memo, Office of Special Education Programs memo, tells us again that we have to incorporate this. So let's talk about this. Let's say our Medicaid claimable expense was $100,000 and the reimbursed portion was about 71% or $71,000. The match expense that they make you pay in order to get the $100,000 is $29,000. Okay, so we didn't really get $100,000, we get the net amount. So again, it's not 100% reimbursement, is it? No, it's not. So those other expenses are still an expense to you. That's why we have to consider it part of our level of effort. Less got reimbursed, that meant those expenses for special education services that were always there are still there. So you got to keep that all together. Okay. More accounting. Let's talk about more accounting. Same thing we just talked about, those reimbursements, the total revenue is not what you're going to claim as part of maintenance of effort. We just want to make sure that you can keep everything all together in a nice little fund 260. You can't commingle it with other general fund expenditures, but you have to be able to prove that your match came from a non-federal source. So keep this in mind as we continue through. Now, inside, again, the application in this red square here shows both in the expenditure section of maintenance of effort and the budget, there is a line item that asks, what did you pay in match? Because remember our example before, you didn't really get $100,000. You had to pay $29,000. So that is what you had to put in here, this is still an expense to you. And there's lots of different sections here. Again, those tabs in the final application will ask you in several places, and what did you spend on match? We know it is still a cost to you for special education programs. So again, you have to budget that too, because you know you're going to be paying it to get your Medicaid funding. Now, some other visual, if you're visual, I like this slide. I inherited this slide from my predecessor, and I like it because it gives me this visualization. I've got my general fund, 100, 521, 22, 616, all my instructional, non-instructional, any other transportation or other non-federal expense that I know is specific to special ed. And I know I have around 29% match component. All of this is my total. Okay. Now on the right side, we're thinking about Fund 260. This is my Medicaid account, right? So to put together that 100%, we had 71% of it was reimbursed, but the other 29% is an expense that stays there. That's how we get that net amount. So we are only interested in that match. And that's the piece, again, visualizing this together, that we count towards maintenance of effort. And I have on here, you're going to verify your FMAP rate. That's the match amount. Those are fluctuating. It's based on our poverty levels of our state, and it will show you that on your statement. And we'll get into that in a few minutes. Now, the other reason for this, we have several different ways that you guys can report your match. Some of you guys do it direct, pay it direct out of a general fund. Others transfer it to special education or to the Medicaid Fund 260, and then they transfer it out and pay it out. But no matter how you're doing it, we need you to tell us. So the reasoning behind that is I have to tell the legislature and the feds how much was spent on special education from our state and local funds. Now, we just showed you over and over again that match is included in that. So I need to be able to call it out, and I do so in the application because we have not mandated the one way and the one expenditure code that you can use for match. So I need you to tell me. The reason is I don't want, and no one wants, to undercut ourselves. This big green piece of the pie here is coming out of your state and local funds. You guys are coughing up 70% on average of your special education programs from general fund. That's a lot of money. Now, the last thing I want to do is undercut that and pretend that you got 100% Medicaid reimbursement. So I pull that match and put it back into the green piece of the pie because you paid it. So that's another reason why we don't want it to look like you got more than you earned because of the matching component. Okay. Now let's talk about some of the year-end pieces. We've got to balance our accounts every year, and it can be kind of difficult. So you've got to have a strategy. So we're going to talk through 4 major areas that you guys can use for strategy. We're going to review our prior year thresholds and meet maintenance of effort. Okay, we're going to make sure we have expenditures there to meet it. Second thing, we're going to have to make sure that we project those final amounts, those what other expenditures are coming through into the MOE accounts, because you don't want to grow it out of control for maintenance of effort. You've got to maintain it. So we want to just get all the projections ready so that we can balance out. We're going to analyze the Medicaid fund, and we got to get it back to zero. The biggest piece here are all the claims in. Don't want to be like the many districts in the summer that call me and they're ready to throw their computer at the wall because they have to rebalance all over again because they got another giant Medicaid claim in. So are all the funds back in from your earnings or your reimbursements? Now we got to resume our IDEA Part B grant drawdowns. So I say resume because one of our strategies is to pause. And if all those funds are spent, then unfortunately, the last place to go is MOE, and MOE might grow a little. So let's get into a little more detail of each of these. So where we're going to review the prior year threshold. Where do we do that? Well, you have the threshold table. We pull it into section 1 of the current application. But if you want to see the full breakdown, including the match line called out and everything, you got to go back to your prior year application and go to section 2. That will tell you what did you spend through June of 2022 so that you know how it broke down exactly so you can get that visualization for this year, okay? So you might have to change the year to get back to the other year for the application. So make sure you flip to the right year. Now, how do we project our expenditures through June of the given year? Well, we got to make sure we review encumbrances for final payrolls, because that's usually the big one that's standing out, right? And that can include any summer accrual payrolls. So if you guys pay for a 9-month contract, but you spread it out over 12 pay periods and you then accrue those final summer payrolls back to June 30th, if that's the way you guys do it, that's fine. But you got to make sure that you have that as some sort of encumbrance or placeholder, be it a budget or however it's going to be, so that you know that that's still coming in as an expenditure. Again, we don't want to overshoot. We don't want to grow maintenance effort out of control. We want to make sure that we have all of our expenditures ready to go. This includes verifying purchase orders, P-card expenditures. What about the copier expenses? Is there some journal entry that happens that you're waiting for, indirect costs, all those types of things that might happen? We want to make sure that all those happen and we can see where all the final expenditures are going to lay out, not just in maintenance of effort, but in all of our funds, right? We're going to double check if anything else is outstanding that needs to still be posted so that you can at least determine what is maintenance of effort looking like. I need to make sure I met it. And if it's overspent, talk about that next. Now, again, this might be the slide you post on your wall if you're in the business office, okay? This is how it's going to help you analyze the Medicaid fund. Year-end closing has to have a strategy, right? We got to get back to zero in our Medicaid fund. And the biggest reason why? Because Medicaid pays before IDEA, and that's federal statute. So if we have not billed for everything through June, we got to make sure that's done, right? And when I say billed for services, I'm talking about special education services that are going to be submitted for a Medicaid claim. So business office, talk to your SPED director. When is that going to be done? And then if you know you have billed for everything, yep, we've billed through all June services, ask a director, who's getting that claim? Who's getting the match statement? If it's you guys, great. If it's not, who's getting it? Because you need to know that last match payment that might need to be made, right? You need to know how much is coming in so you can create a receivables to help you balance the fund out and say, okay, I've got another 25,000 coming into Medicaid Fund 260 in revenue. Now I'm over or under. So think through it that way. Verify on that claim statement if any match is required. In the picture, you may not be able to see it here, but you will when you get the slides. It talks about if there's any additional that's owed. So if you have a trust balance, they might just pull it out of there. But if you have to send any more, you're going to have another accounts payable claim, right? So another expenditure that you need to capture so that you can balance out. And the reason that we're doing this, we've got to make sure that we know everything is in place. You can run a revenue expenditure reconciliation. It might be a report or some way for you to calculate how much final revenue or expense will be remaining in that fund. And then you're going to determine, number 6, if you have to journal entry anything out. Was there excess expense still sitting there? We had too much sitting in there. We didn't get back as much as we thought. If so, we're going to move expenses out. Or what if we got an extra $50,000 in revenue sitting there? Now we need to pull in additional expenditures from either your maintenance of effort or your IDEA account. Because if you met maintenance of effort, you don't want to grow it beyond, reasonableness. If you've got funds sitting in the federal grant, now's your time, and you're going to draw down those IDEA funds, okay? So this is the slide. We're going to analyze our Medicaid fund, all things Medicaid, anything that could happen. We got to make sure that we understand where we're at. And again, then last, we resume. I say resume because we tell people to pause in the 4th quarter until you know where Medicaid's going to land. But then you can resume. If Medicaid is balanced, you met MOE, you can resume that grant reimbursement if you have money left. Now, if it was overspent and you don't have any IDEA left, you have to go back to maintenance of effort. So again, strategy on the journal entries where we, if you're trying to budget some carryover and your maintenance of effort it has been met and you still just agree to grow it a little to save some funding in IDEA, that could be your strategy. Now let's talk about some specific examples of Medicaid. What if we overspend? Okay, again, the answer is you have to get back to zero. So you or your auditor, if that's the case, would transfer expenditures through a journal entry out of the Medicaid fund back to capture as maintenance of effort or IDEA if there's funds remaining. Now, otherwise, you're underreporting maintenance of effort or underclaiming on IDEA, right? Because again, Medicaid is a reimbursement. It's the whole word reimbursement. It's an expense that you already incurred. So it has to be captured somewhere. That's the whole goal of this slide, is for you to remember that. Okay, balancing the Medicaid fund if we're underspent. So then what do? Well, we got to get back to zero is the answer still. This means you have to first meet maintenance of effort. So if you need to draw, some expenditures back to get back to zero, you can't take for maintenance of effort if it means you won't meet maintenance of effort. Okay. So get back to zero, and lastly, spend out the IDEA funds. Now, I've had folks that say, hey, I can't take expenditures out of maintenance of effort, or I won't meet it, but I already drew down all these expenditures in IDEA. Now what do I do? Well, you get to send me a check back from IDEA, right? So now you'll have excess expense in there, less revenue, because you sent me the revenue back. I put it back in the GRA for you. So it's not the end of the world if that does happen. But you have to make sure you get Medicaid back to zero. So if you're ever in that predicament, give us a holler. We have a procedure for this. No one wants to be there, but we do have a way to clean it up, okay? So don't fret. But again, bottom line here, if you're leaving revenue in Fund 260, you're either over-reporting maintenance of effort or over-claiming IDEA funds, or both. And no one wants to grow maintenance of effort if they don't have to. So this is, again, another slide to print out. This is a good old favorite. Balancing our 3 fund sources. First, that level of effort. We got to make sure we meet it. Second, getting Medicaid back to zero, sweep or journal entry in or out for final expenditures between the maintenance of effort and IDEA funds. Third, finalize those drawdowns in the federal grants if you had funds left. So that's the biggest piece there. If you have ARPA IDEAs, the last year of ARPA, you can also do that. Think of it the same way that you think of your regular IDEA funds. Again, those funds are last. But the bottom line is you cannot carry a negative fund balance in IDEA funds or Medicaid because they're federal, they're reimbursement-based funding streams, okay? So don't forget to sweep at year end. Another little recap, I like this one because people say, when do I draw the line in the sand? I mean, we're in a week before our auditors get here and we don't have our final June payments, and I don't know when they even submitted it. Now, you guys get to determine that, okay? If you guys need to close out and you haven't received that money yet, you can pull it into the new year. But what that's going to do is possibly not make your balancing act the same as it was in a prior year, because you're starting the year with possibly more revenue from Medicaid that you're going to have an expense against, okay? So think about that. Think about how you can do that. But you guys get to determine LEA to LEA how you go about that to draw the line in the sand to close out your books. Now, the billing frequency is really the key, though. So make sure that you're caught up. If you have any ability to do that, make sure you're caught up. But if you're in June and they haven't even billed through February, you just need to be aware of that. Are they going to get caught up? But think about this. The timing of those reimbursements are related to your reconciliation closeout process. And less Medicaid funds, if you don't have time to get it in on time, if they don't get the reimbursements back in time, might mean that you're increasing maintenance of effort. And now, again, you're off kilter. So communicate regularly, business office, Medicaid billing staff, whoever it is, make sure you know who your partners are, because this takes several people to get this to close out. And pause those fourth quarter grant reimbursements from IDEA funds till you know you're safe. And then set up those final receivables and get your final spend out plan ready. I also want to talk a little bit about match reconciliation, because this is another gray area for a lot of folks. So here's a picture of a match statement. When you get this, you need to do 2 things. You've got to record the match expense, right? Now, if you need to pay the match, you're going to pay it, right? You're going to pay an expenditure. You're going to have an accounts payable. You're going to send money over there, right? If you have a prepaid account, you have money sitting in a trust balance. You need to reduce your prepaid on your books to show what the new balance is. And then lastly, you're going to do create the receivable for the amount of funds that you know you're going to receive. So in this example, it says your payment amount is going to be $11,322.07. Great. I know that's how much I'm getting. This one shows the total amount of match required is $2,656.16. In the middle of this, it says, oh, but wait, you still had $887.30 sitting here. So we'll take that first, and you still need to send $1,768. So you're going to have an expenditure that you have to send, right? So you're going to have that accounts payable. You can set up your accounts receivable, but you also need to drain down your trust balance. Now, that's the area that I really want to get into. A lot of folks have funds sitting over in Medicaid's trust account, but they're not transparently showing them to their board and their other constituents anywhere on their ledgers. That's great if you sent $1,000 or $100,000 over there and you're draining it down over time. That's allowable. That's totally allowable. But anytime you send money over somewhere, it's a prepaid. So you need to carry a prepaid asset balance on your books. You need to be able to show that you have X amount sitting over there. And then every time on those match statements, when they come through and say, well, this time we took $759.98, you got to reduce your asset balance. So you're transparently reporting to your board, oh, well, we started with $2,892.20, but the last claim came through and they pulled out $759.98. So now we have a lower balance. Okay. Now we're lowering it down, and here's our new trust balance. Okay. We now have this $2,132 left as a prepaid asset available to us to spend. So again, transparency, it's a requirement to our constituents and our boards. They need to know that you have money sitting over there, okay? But it also keeps you on track, because if last year you budgeted an average of $10,000 in match that was utilized, and you started out with $2,500 over there, you know you're going to need to send more money over there. And you'll be able to watch as those claims come in when it is that you need to trigger another accounts payable check over to health and welfare to get you back into a trust balance, okay? So you can keep those claims processed. For your accounts receivable, as you're getting ready to know what's coming in, this is where, again, program staff might be getting these remittance advices that's going to tell them the amounts coming through. That's not exactly what the business office is looking for. They're looking for the actual match statement. And that's where it tells them any match required, the total revenue coming in. So make sure that you know who is getting what, and you know where to look on those claim statements to see. On the left side is small for you guys, but it also has a section if you have those prepaid assets, you've got money in the trust account. It's just like a bank account. They earn interest. Well, guess what? That prior journal entry where we showed the deduction of $700 and some odd, you would then have another offsetting entry that shows, but we earned $100 in interest, you know? So you have to be able to show the in and out of any interest earned. So a lot of folks set this up like it's another bank account. And each month they get a statement, just like a bank statement, and they got to balance the bank statement with any claims that came through, any interest earned, just like your bank account, and any checks paid, any match that was taken, just like checks paid out. Same concept for balancing a bank statement. So think through if that's another process or procedure that you might want to put in and set up for yourselves to balance each month. Now, last piece I want to go over with you guys. One of the biggest findings we still get for when we do our fiscal audits and our fiscal monitoring for special education programs has to do with Medicaid third-party billing fees. Not just third-party billers, it could be an in-house person. Anybody that's billing, that you're paying to do your billing to Medicaid to say, hey, here's $100,000 in expenses that we're going to turn in to see if we can get reimbursed. It takes time. Somebody's packaging it up. Somebody's doing the work. Now, if it's a third-party vendor, you're paying an administrative fee on all of those, but the fee is not something that you actually bill Medicaid for. You cannot bill them for your fee. You're billing for OT, PT, speech language services, those types of things. Those are billable services, not the administrative fee. You're not billing them for that. So you can't charge that to Fund 260, which is your Medicaid account. Okay, you cannot put it in there. It's not allowable. And more on this note, you cannot put it, it's not considered an allowable cost under the Uniform Grant Guidance. It's not considered an allocable cost. So you cannot put it in the IDEA account, and you cannot charge those fees or the person's time that's billing. You cannot charge them to maintenance of effort either, because it is not a requirement under IDEA or under the whole special education component to have somebody bill for Medicaid services. Okay, so it has to come out of somewhere, out of general fund or somewhere else. And I have a link to our manual. We actually call it out in our manual. There's those two federal codes that actually call it out. So an example of where you could charge us would be like another business fee under 6513 something for contracted services, or if it's your in-house staff, of course, you'd have your payroll accounts. But what I want you to glean out of this is, yes, you had to pay somebody to bill for your Medicaid services, but I guarantee you, you're not spending the time and money to have somebody bill for Medicaid if your earnings are less than what you pay the person to bill Medicaid. So you're still coming out ahead. So think about it that way. It's another cost. It's another indirect cost. I got to pay my business manager or my payroll director to do stuff, to process payroll. Those are still costs to do business. Same thing for this, but you just have to keep it separated. So again, think about those components when you're getting ready to close out your year. And with that was a lot of information. I wanted to see if we had any questions come in the chat, anything specific to anybody. I know I want to mention again, the ARPA funds are ending come September 30th of 2023 this fall. But again, those are the last bucket of funds. If you have other 2021 funds that you hadn't spent out, most of you spent those long ago, but those also end this September. They end with ARPA. But make sure you spend out the oldest funds first, okay? Because nobody wants to lose sight of that and lose funding. And just remember that, you guys have friends, you guys have other folks that you can reach out to, see how they're doing it, see what makes sense to them, consult with us. And I have a question in the chat says, do we get to subtract our reimbursements from MOE? Reimbursements, if you're talking about the total revenue that you get from Medicaid, that does not come out of maintenance of effort, no. So maintenance of effort is all things that you guys have to cough up expenditure-wise that aren't coming from Medicaid reimbursements, that are not coming from federal IDEA grants. That's what you guys spend from your state and local, and Medicaid does not get subtracted out. The only piece we're interested in now is the expenditure that you paid for match, because we know that that is a piece that does not net out. It is not the piece that gets paid from revenue. You had to pay $29 to get 100. You didn't really get 100. So I think that may answer your question. And remember, today's session is recorded. We want to make sure that we have time still here. We still have 10 minutes or so. If anybody can think of anything else, does anybody have any exception wonkiness scenarios they want to put out there? This is a meeting, so you can unmute yourselves and I'll stop talking. Just want to make sure we've addressed everything we can. If you haven't been notified any issues with your preliminary application, you should be getting an approval this week to show that it went through. We will have the next component of the application, the final application, will open hopefully next week. And that's where you guys can start reporting what you spent. Most of you guys are just going to be starting accruals, and I don't expect you to have it done. You have until November 15th. But make sure that you guys are strategizing and aware of what's happening with Medicaid, so you guys can close out once, not 5 times. We want to make sure you have all of that dialed in. And if we don't have any other questions, I just want to wish you guys good luck with year-end closeout, and we will post a recording of this and send it out to everyone that missed it so that they can watch. And please reach out if you guys have any other questions at any other time. We appreciate your time today.